What's up, everybody? Welcome to Trades of the Week, our brand new series here at Chart Addicts where we break down our top signals for this week. Let's get right into it.
I guess since we're on Euro Pound, we'll go over it. All right, you guys can see I'm looking for buys on this position or this pair, considering we were going down. Swings are starting to come down, lower swings, and then we get a shift up. After this shift up, you guys can see we're starting to create higher swings, higher swing highs and higher swing lows. Huge shift in momentum again, managed to clear previous areas of resistance, and now we're testing as new areas of support. All right, I believe we had some rejection on the 8-hour time frame, and if you guys can see in the chat box, Stefano said if we get a nice double bottom, honestly, on any time frame, that would be enticing to take this potential buy back up to this swing high, and if we break that, we can potentially go further. All right, so just looking to the left and using previous areas where we reacted in the past as new target points. All right, we're looking to take long opportunities. If we're looking to buy, we're looking to buy at support. Price came back to test. You can see 84750. And if we hold above with rejection, double bottom, inverted head and shoulders, some wicks, it could be a sign to take this back up. Starting off with EG, you guys know we were looking for buys off this break retest. All right, we were making higher swing lows, higher swing highs. So we knew we were looking for buying opportunities. And if we were looking to buy, we were looking to buy at areas of interest where we've reacted in the past. I like to look at the most relevant areas of resistance turns into support. And right away, I see this beautiful area that we reacted twice in the past. We broke above with a strong candle, created new swing highs, and pulled back to make a new higher low. I think even scaling down, we had a nice double bottom before it ended up taking off. My first target, honestly, was like this previous swing, all right, the most recent swing, but ended up breaking that and honestly testing even a 0.856. So it's always nice to see, the technicals align with the fundamentals. Personally, wasn't even looking at the news.
All right, so we sent out a signal yesterday as a sell limit at 156 exactly, 156 flat. We're risking about 50 pips. I think I have a first TP or TP1 100 pips. Since we are already 50% profit, I want to decide to book my partials and move my stops to break even. Pretty much self-explanatory. We have bearish structure form, and as you guys see, structure is king. Look at this, how this lower highs and lower lows have been retested. We finally found a potential trade. I know that we took trades on my calls right here, this area right here in particular, 157.30. This was the correction of the 78.6 happening order right here, and I have a super conservative stop loss. That's why sometimes we gotta put our stop loss way above that previous high, because we never know what when you're gonna have the spike right here. But nevertheless, this thing just melted. All right, the market gave us many opportunities to enter this trend, and this is one of the opportunities that we found to actually join this trend to the downside or this downtrend. I was also playing around my EMAs. We're trading below the EMAs, and notice that we have EMAs crossover all over. Actually, we broke below all the EMAs and traded below these EMAs at this level in particular. So that gave me a lot of confidence. Look, this 156 level broke below, and we broke below these two EMAs. Notice that we were, playing around those EMAs. So within those areas, it wasn't confirmed, in my opinion, according to this EMA strategy, but we ended up breaking below. Nevertheless, the last thing I did was measure this impulsive move to the downside. I saw the correction lining up with my structure, so I decided to take the trade at the structure area, which is 156. We did got a little bit of drawdown, but nevertheless, the prices push up exactly to my area. See, it's 78.6, and that is why I decided maybe I should have put my stops. My entry, if I wanted to be sharp enough, exactly to the 78.6 line, which is the price is 156.10. But I figure maybe a lot of times the market tests those quarter points and rejects exactly at those quarter points and do not get to that area. So really wanted to play with the structure this time, and indeed actually played out. So we have many confluences. We have lower highs being formed, lower lows being broken. We do have bearish structure. We do have a trend line. We do have a Fibonacci at the 78.6, so we do have Fibonacci short, and we are targeting the 23 and perhaps that previous support area. And nevertheless, we do have more confluences here as the EMAs, as prices are trading below my dynamic resistance, and those are my EMAs. All right, so many confluences for this trade. Super confident.
So if the market comes down and gives us a good entry at 190, the area that we would need to break to kind of prove that this thing is going bullish would be this next structural zone. Now, if this candlestick closes above that zone, then it really might just stall here before it pushes up. What I usually do with the structural zones is I'll expect price to come down, give me a nice double bottom right here, get a great entry, risk and reward. My take profit is still 16,300. Okay, I don't want to cheap out on the stop loss. Really, it should be below this consolidation range, just in case price wants to come inside the range and then come back up. That's about 28 points, 287 pips. It's a little bit wide, but the risk and reward is there. So it's about 3.5 to 1. So if you guys are risking 1% on this trade, you're looking to make 3.5% back for that position. The first take profit levels would be this previous high. 16,215 would be that take profit 1. And then as the market starts to break higher, we can take other positions. Or sorry, not take other positions. We can take other partial profits. Oof. There's that Nasdaq. So I'm going to go in 0.5%. Stop loss 16,160. Take profit. TP1 is 16,216. TP2 is 16,300. All right, so Nasdaq is up a bag. Almost 1,000 pips, people. Almost 1,000 pips. Is this normal? Guys, you tell me. To catch 1,000 pips in less than an hour.
From the outside looking in, hell no, this ain't normal.
Dude, look at that Nas, bro.
Dude, I can't make this up. This is 1,200 pips in running. Who's still holding a runner, guys? Who's still holding a runner and who had their TP hit? And what's crazy, Andy, is we literally did this yesterday. We literally did the same thing yesterday. So we just hit that 16,300 TP that we had and rejected perfectly, guys. So look at the TP. The TP was 16,300. We had a beautiful short-term rejection. Let me put a price note right next to it.
That was beautiful, bro.
16,305. Well, this candlestick is reversing right now at the 16,300, right at the TP. All right, that about wraps it up. Those are our top 3 trades this week. If you guys enjoyed this new series, make sure to click, like, and subscribe. We'll see you next week. Till later, happy and safe trading.